Bob, what did you make of this picture of the banks?
Well, it was a better third quarter than second quarter. And the second quarter, David, is as you and I both know, net income for the banking industry was down about 70% year on year. But I think the message here was we saw really a clarity to the difference between the more you were in commercial banking and taking deposits and making loans, and the more you had a more balanced business and asset management and wealth management, and particularly in the trading businesses, the Goldman Sachs and the Morgan Stanley, probably the extreme example, the better the results.
So what do you do if you're a Bank of America? Because they tend to be more in the traditional commercial banking sector. Do you try to make it up on volume and cut costs? What's the strategy?
Well, they certainly have a good sales and trading area as a result of the Bank of America acquisition during the financial crisis. So it's probably a question of balance, is that they're so big and so large in commercial banking that it probably overshadowed that a bit. I think the challenge for the commercial banks is just what we were talking about earlier. 400,000 small businesses have already closed this year. The services sector, which is 85% of the employment in our economy, is really, really suffering right now. So are the loan loss reserves, which are up significantly, and for the four biggest banks, loan loss provisions are about double in the first half. And the question is, are they enough and are they adequate? I would suggest that the risks are on the downside there.
Well, that was part of my question. If you're a commercial bank right now, are you more worried about bad loans, or are you worried about just the lack of demand for further loans?
Well, I think you're worried about a couple things. You're worried about, taking in deposits, and the 4 or 5 largest banks have 60% of the deposits in the U.S., but at zero interest rates. How are you earning money on those? So where is the earning coming from in a zero interest rate environment? Where the Fed is saying that we're going to have zero interest rates or something similar to that out 2, 3, or 4 years. And on the other hand, you have, real significant issues around certain sectors of the economy and certain businesses in terms of the potential for them to be loan loss provisions or increased or in fact, real losses. So I think it's very, very challenging for the traditional large national commercial banks to see where their earnings are coming from. And I think further, there's a bit of worry in terms of loan loss provisions.
So, Bob, if you're an investor and you want to invest in banks, where do you go? Do you go to the big banks that we tend to think about so often? Do you go to regional banks and local banks? Do you go to something that's really not quite a bank traditionally, but is in the banking sector, or at least doing things that look like banks?
Well, that's the interesting thing, David. We are investors in financial services, and we have 3 broker-dealers in our portfolio, one in the U.S., one London-based, and one Paris-based. It's a European equity platform. All 3 are having record performance this year and continue very strong into the third quarter. So there are platforms, such as the broker-dealer platform, that can be more efficient outside of a bank holding company than they can inside of a bank holding company. As we've seen with the large national banks, we talked about too big to fail in 2008. Well, the largest national banks are bigger. They're probably more systemic. They're definitely more connected and intertwined with the government. There's more correlation of risk to the national economy. And for all of those reasons, whether you're being driven by technology or other business models, kind of the monoline approach to focus on certain business sectors and become a specialist in those business sectors, whether it's a broker-dealer or a payments processing business, there's a lot of opportunity outside of the large bank holding company.
And briefly here, Bob, we're so close to the election, we can't get by without asking, what would a Biden administration, if it happened, mean for the banks? We heard Jamie Dimon this week say, actually, he's hopeful if Biden got elected.
So I don't know if it's specifically for the banks, but I think what we're seeing is businesses getting more and more comfortable with the prospect of a Biden administration. And I think the impact that he can have in terms of trade relations and relations with other countries around the world, the impact he can have in terms of the stimulus program, because of all the things we're talking about earlier in the program with the services sector. And, for me, what do I worry about every single day? Unemployment and small businesses. And how has the pandemic had an impact on them versus large technology companies. We know they're doing fine, right? But small businesses, particularly small businesses in the service sector, and to say, the number is stunning. It's 85% of the employment.